Okay, this is oldschoolcharts.com, and we're going to take a quick look at the S&P to see what happened today. We're going to start with your basic information. You trade at your own risk. This is for entertainment and educational purposes only. Go check out the website. There are more videos there, some of which I may refer to. Let's get rid of that. Here's a fairly long-term view of the S&P. If you've seen some of the other videos, you will know that I believe this is an inverse head and shoulders pattern, and I believe that this pattern is ultimately going to lead the S&P to a target price of about 1250 minimum. Could be higher than that. If you back out, you can also see, come on, give me my picture. There we go. We have a really large head and shoulders pattern that marked the market bottom that has a target in the mid 1300 area. Let's zoom in on a 5-minute chart. I'll tell you what, let's go back to the hourly. If we start at this bottom and draw a trend line, I think you can see that that we've touched this trend line 1, 2, 3 times. We hit it today. There's also an upper trend line that that we're not close to reaching yet. We may not reach that line, because sometimes you end up with a trend that that breaks, undergoes a consolidation, then it continues on up, but it's kind of like it changed lanes. It just kind of shifted to the right, but it still goes up. So this is the neckline from the small inverse head and shoulders. The green line is the bear trend resistance line that's drawn over the top of the bull market from October of 2007 and the highs of April 2010. We are significantly over that line, and that is of technical significance. I don't think there's any question about that. Let's go to a 5-minute chart, and we'll look really more specifically at today's action. I need to adjust this line because when I go to the 5-minute chart, there's just a little error that gets introduced, and that line tends to move down $4 or $5. Anyway, this was the high from yesterday. This was today's open. We came up, down, up, down, up, down, up, down, and then up a pretty good bit at the end of the day on that line where it should have. If we connect as many tops and bottoms as we can in the S&P, we end up with what is known as a bullish wedge. And that is a descending pattern where prices get more and more constricted. If you were looking at the market today, about here you started to just get bored to death because prices just really weren't doing much of anything at all. And that's the nature of wedges. There's a good bit of action as they start to develop, and then it just kind of seems almost as if investors lose interest. But we broke out of that wedge. It's possible that that we come back and back test this line. That wouldn't surprise me. But the fact that we broke that downtrend that lasted just a little bit more than a day tells me that that we're probably going to be going up from here. And so I'm encouraged by this action. I really was kind of thinking that we would not see the 1167.50. I was thinking that we would probably be caught around 1171, 1172, but that simply was not to be the case. Kind of interesting here too, if I can point out one more thing before I wrap this up. Look at the resistance that this level right here created. If we draw a horizontal line and move it to where it needs to be, we'll see that that resistance that was difficult to break has now turned into support. That's typical. It should remain support now for at least a while. I think we're headed on up, and I look for a good day tomorrow. Good trading to you. Please visit the website when you get a chance. Thanks.